hacking is one of the easiest ways for you to get involved in real estate. But one of the things that I found is that many people that are involved in house hacking does not get the tax benefits that they can be getting while house hacking. So that is what I'm going to talk about in today's video. Tax write-offs that you can take as a house hacker. Before we get started, let me introduce myself. My name is Keisha Rondino. I am a real estate and business CPA and tax strategist. I have helped real estate professionals and business owners use the tax code in order to save over $3.5 million in taxes. And I would love to help you. So if this is something that you're interested in, make sure that you like this video and subscribe. So let's get into it. House hacking. Let's first start talking about what house hacking is. So house hacking is a strategy that involves renting a portion of a property in order to generate income and help pay for expenses that property generates. And this has become more popular over the last 5 years. And it's something that so many people are involved in at a big level, at a small level, but a lot of times they are not getting the tax benefits that are afforded to them. And so when you're house hacked, you can either have a single family property in which you live in a room or a portion of a property, and then you are renting out other rooms or perhaps a basement area. Or you can also have a multifamily property that you live in one unit and you rent out the additional units that are in that property. So as you're house hacking, one of the first things that you want to do is separate out your personal portion that you utilize with the property and separate out the rental part. So you want to know what your percentage of it is as an owner that lives in a property and the percentage that is utilized for rental property or rental purposes. Once you separate out the portion that is used for rental activity, then you want to take a look at what you can write off in that property. So when we talk about write-offs are expenses that the IRS says are tax deductible on your tax filing. So what does the IRS determine to be tax deductible? So the IRS says that any expense that you incur that is ordinary and necessary in your line of business operations are going to be tax deductible. So any expense that you incur in relation to operating your house hacking is going to be a deductible expense. So let's talk about what some of those are. First is going to be the mortgage interest. So when you buy a property, chances are you take out a loan in order to buy that property. So each month, when you make payments on that loan, a portion of it is principal and a portion is going to be interest. Well, the interest portion of that payment is going to be tax deductible. So at the end of the year, you're going to receive a 1098 mortgage interest form from your lender that is going to tell you the amount of interest that you paid throughout the year. You're going to use that amount as a tax deductible expense on your tax filing. Another write-off that you can take is going to be property taxes. So as you purchase real estate, you will have to pay property taxes. Depending on where you live at, we know property taxes can be a large expense once you have made that purchase. And so you do get the benefit of writing that property tax off each year that they're paid. Now, you have to remember that the write-off is in the year that it's paid. So if your tax bill is due in February, if it is paid in December, then you will recognize that payment as an expense as of December of that year. So knowing that when you pay the property tax is going to be when the tax will be a deductible expense on your tax filing. Another write-off is going to be any repairs or maintenance that you have to the property. And so you may have pest control personnel that comes in. You may have to get a window repaired. You may have to get a door repair. You may have to add new flooring to the rental part of the property. So those repairs and maintenance costs that are directed towards the rental part of the property are going to be deductible expenses for you. Another write-off are going to be the furnishings that you have when you are getting the property ready for use. So meaning that if you have to buy a new sofa, you may have to buy a new bed, a new nightstand. So as you furnish the property, in order for it to be ready for someone to move into and to utilize, those furnishings and those expenses are going to be deductible, because you can't have someone move in and not have it ready for them. Usually when you're house hacking and you are renting out a particular room, then you usually have furnished that room and you have it decorated very comfortable for that person. Maybe if you have a multifamily and you're living in one unit and you have one completely separate unit, someone may come in with their own furniture, so you won't have to decorate it and furnish it as much. But let's say you do, then those expenses are going to be deductible for you. Another write-off are going to be the utilities that you pay. So you have to pay for gas, for electricity, for lights, for water, in order for that home to be able to function. So that is going to be a deductible expense for you. Another write-off are going to be the insurance premiums that you pay. So when you have a property, you have homeowners insurance. Depending on where you live at, you may have flood insurance, you may have wind insurance, you may have other type of insurances, depending on what the weather is like. Those insurance premiums are going to be considered to be write-offs for you. They're going to be deductible expenses, and you're going to document them for tax purposes. Another write-off are advertising costs. So as you advertise in order to get someone to rent out your space, whether it is a room in your home or whether it is an actual unit in the property that you live in as well too, those advertising expenses are going to be write-offs. So if you advertise in the newspaper, you may have an ad on the radio, or you may go to the local college if you are renting a room out and maybe putting up some kind of flyers. The cost of making that flyer is going to be a deductible expense, a write-off for your house hacking activities. Another write-off are going to be HOA fees. So many times when you buy a property, there are HOA fees that does have to be paid to the homeowners association in order for you to live there. So you want to take that into consideration. Keep track of it, because that's going to be a write-off for you. And when we speak of taxes, another tax that you may want to be aware of are local or county or city taxes when it comes to house hacking. So there are many locations now that have imposed additional taxes and fees for someone that may be renting out either a room in the house or they're utilizing some type of rental type of activity in a property. So make sure you are aware if your city or your county has imposed this additional tax, because you will have to pay it. And if you do have to pay it, it is going to be a write-off for you. So once you are aware of all of the expenses that you're able to write off as deductible expenses, you then want to prepare to report it all to the IRS on your tax filing. So usually when you house hack, you are reporting your real estate activities on a Schedule E in your 1040. And so this schedule is a supplemental form that is included in your Form 1040 tax filing. And on that form, you are able to deduct these expenses, and you're able to deduct the portion that relates to the rental activity. So, earlier when I mentioned that it's important to know what your percentage of living in either the single family home or the multifamily home, what your owner percentage is versus what the rental percentage is, because you're going to be able to deduct the percentage or the amount that is utilized for rental purposes. You want to not only report it, but you want to make sure that it's reported correctly. And so having documentation of what you spent on for property taxes, what you spent in repairs, all of that is going to be supporting documentation just in case the IRS ever asks, okay, where are these expenses from and how did you come up with the amounts that you found to be deductible? One of the things you don't want to do is you don't want to overestimate the deductions that you should be taking. And that happens a lot when you don't separate out the personal and the business part of those expenses. And so as we talk about record keeping track of the personal side of it as well as the rental side of it, it's really going to help you report it correctly to the IRS. And so as you gather all of this together, you may want to think about how you're going to accurately report it to the IRS. So you may have all your documents together, but you may still be unsure on how to report it to the IRS. So as you're going through all of this, make sure that you are doing it correctly. If you do not feel that you can report it correctly to the IRS, or you're not sure and you don't know what you're doing, don't be afraid to reach out to a professional that can help you with it. Because I've seen numerous times from working with clients that in the past, they may have attempted to report all of this to the IRS themselves, and it comes to find out that it was not done correctly, or they missed out on something, which meant that they overstated what their income was, which meant that they overpaid in taxes. And no one wants to overpay in taxes. So unless you are sure that you know what you're doing and you feel confident that you are doing it correctly, reach out and make sure that you're working with someone that knows what they're doing and that they can help give you the best benefit that is afforded to you, being that you are house hacking. So again, some of the major points to remember when you are house hacking for tax purposes is to know what write-offs you can take. Keep track of what those write-offs looks like. So keep track of different receipts, whether you have invoices, whether you actually have payments that were made. Keep track of it all so you can report it correctly to the IRS. And don't be afraid to work with a professional that knows what they're doing so you can get the best benefit. So I hope this video has been helpful for you. If you did find it helpful, make sure that you like and you subscribe to my channel. If you have any questions, definitely feel free to leave it below. I will make sure to answer those. And if you have any topics that you wish for me to discuss, you can leave it below also. I'll see you in the next video.